Hello everyone. My name is Vikas Agrawal, and I'm the founder of AIF and PMS Experts India. I am recording this session to basically share my understanding of markets with most of our investors. And all of you know that markets are going through very difficult time, especially last 2 days have been very disappointing in terms of markets correcting by good amount of percentage. So what we're going to do is, I'm sure if you have invested your money, then obviously you're concerned about it. So what I'm going to do is I will share one important chart that I have come across, and then this will give you different perspective altogether about how do we sort of behave in these markets. If you look at, this is the recent chart that I have come across and read. It gives you a complete history of the markets. So let me take you back to year 1996 and 1997 when our economy witnessed Asian financial crisis. And immediately post that during 1999, this market also witnessed Kargil war happening in India, with Pakistan, and then post that immediately we came out of this and we saw dot-com bubbles. Then post the dot-com bubbles, as soon as market came out in 2001, we saw major scandal, which is Ketan Parekh scandal, which was supposed to be the biggest scandal in the history of equity markets. And then we saw then we had a bull run, from 2000, starting from 2002 onwards to till about 2007. And as soon as 2008 began, all of us knows that we saw Lehman Brothers crisis happening. We saw global financial crisis. Everybody talked about recession hitting Indian equity markets also. In India, we saw Satyam scandal happening where, the balance sheet was manipulated. And then we saw European debt crisis happening, that is in 2010 and 11. So we saw Brexit happening, and the European markets, so they kind of separated from each other. And then we saw in 2000, post that we saw in 2013-14 taper tantrum, as in the Fed rate hike after 9 years we saw in 2016. And that was a time when market peaked out and again, fell down by good 7-8%. Then we saw in India demand happening. These are major events that we want to talk about. So during the demand, we saw markets correcting in 2017, and then we saw our economy got ICU, hospitalized and went into ICU. As in, we saw a couple of major reforms happening, and as a result of that, the economy which was up and running kind of stopped in between. We saw the GST implementation when the government of India was implementing the GST. Most of the people didn't know how to go about it, and they kind of stopped the billing happening. They kind of stopped the entire billing units for some time and learned eventually how to go about it. Then we saw IL&FS crisis happening, and during that debacle, for the first time, we saw AAA rated paper. They kind of bellied up. And then 2019, we saw major reform happening, as in the Indian corporate tax got cut, and from 33% it came down to 25%. Then 2020, all of us know that we've gone through pandemic times, and as soon as we came out of pandemic, we saw a major Russia-Ukraine war, and then during that time, RBI begins to hike the rate in order to fight with inflation. Then we saw US Fed begins rate hike to fight the inflation, and we saw recently Israel-Hamas war, which is happening. But despite all that, we traveled the journey, and Nifty went up to 25,000 levels. Obviously, now what we are witnessing is again a sort of markets getting corrected. We are witnessing that again the situation is more or less same, that we have some amount of geopolitical risk coming from Iran trying to attack on Israel. We saw Berkshire Hathaway declaring that they sold good amount of share of Apple, almost reduced the exposure to 50%, what it used to be earlier. And they're sitting on almost $50 billion of cash. That affected the US markets. Then we saw yen suddenly going up in Japan, and as a result of that, Japan markets got corrected by 25%. But when you look at globally, relatively, India has fallen the least vis-a-vis other markets, whereas some of the markets really got affected. Largely, it's led by Japan and US. But having said that, to my mind, I would say that this is nothing but an opportunity. We see that next 5 years, the kind of plans we have. You look at by any standard, any Indian numbers that you look at. For example, you see the GST numbers, which is inching up month on month. We are talking about 200 lakh crores of collection on a monthly basis. We are talking about GDP to grow at 7.8% to 8%, close to that. Our exports are improving day by day. Current account deficit has been well handled and managed by NDA government. We are targeting a good amount of surplus coming in through that, and the count is well managed. So, keeping that in mind, what we believe is that these crises is nothing but an opportunity. If you have already invested in equity markets, stay invested. You don't have to do anything about it. But if you have some additional surplus, I would say that this is an opportunity to top up your AIF and PMS wherever, or mutual funds that you've invested in, or the direct equities, uh, because this can turn out to be an opportunity for you to improve your overall allocation towards equities. And what we are going to say is that if you have a horizon of 3 years to 5 years, then these sort of crisis would, help you to average out your investments. Because particularly in PMS, what happens that these are individual accounts held on your name, and averaging doesn't take place. But if you keep on adding some amount of funds during this crisis, you will see that your portfolio doing very well when the market would bounce back. So with that, I'd like to conclude here, and thank you so much for giving your patient hearing. In case you wish to know about your portfolio or anything else, you can reach out to my team any point of time at consult at aifpms.com, and I will ensure that they'll give you right information. Thank you.